Hi everyone, Uros Markovic here with the Real Estate District, and this is your June 2026 Calgary Real Estate Market Update reviewing main numbers from Calgary Real Estate Board. This month, the story is not that buyers have disappeared. The story is that buyers have more choice. That one shift changes a lot. It changes how quickly home sells, how buyers negotiate, how sellers need to price, and which properties are still holding firm versus which one are feeling pressure. In May, Calgary recorded 2,162 sales, which is about 16% lower than May of last year. New listings also came down with 4,226 new listings, about 13% below last year. But even with fewer new listings, inventory still reached 6,752 units. This is the key number this month. Inventory has continued to rise from start of the year, and while it is close to last May's level, Crab noted that it remains higher than long-term trends for this time of year. So the market is not being flooded with new listings overnight, but the balance has changed. Buyers are not walking into the same tight market we had over the last few years. They have more options, especially in apartment and row style homes. And when buyers have more options, they compare more carefully. They look harder at price, condition, layout, location, condo fees, upgrades, and overall value. That is why strategy matters more now than it did in a faster market. The overall months of supply in May was 3.12 months, which puts Calgary closer to balanced market condition overall. Days on the market moved to 34, and the total residential benchmark price was $570,500. That is up from April and up from January, but it is still about 3% lower than May of last year. So that is the important point. Prices have improved since the winter, but they have not fully recovered to last year levels. The spring market brought more activity, but it did not completely erase the impact of higher supply. So let's break it down by property type. Starting with detached homes, this remains one of the most stable parts of the Calgary market. In May, detached sales were 1,192, down about 6% year over year, with new listings were 2,195, which is down about 9%. Inventory was 2,916, which is actually lower than the last year. So months of supply for detached homes was 2.45 months, and benchmark price was $747,800. That is down 2.4% from last May, but up from $722,000 in January. So detached homes are not as heated as they were during the peak years, but they are still showing resilience, especially in areas where supply remains tighter. For detached sellers, the message is not panic. The message is precision. If your home is priced well, shows well, and competes strongly against the current inventory, you can still do very well. But if your price is based on last year's market, you might sit longer than expected. For detached buyers, there is more breathing room than before, but quality homes in strong locations are not being ignored. When we look at detached homes by district, the strongest area in May were West, South, and Southeast. The West District had only 1.77 months of supply, with a sale to new list ratio above 62%, and prices were almost flat compared to the last year. The South District had the highest detached sales to new list ratio in the city at about 65%, with only 1.8 months of supply. The Southeast also looked healthy with 2.14 months of supply, a sales to new list ratio near 60%, and strong month-over-month detached price gain among the districts. On the softer side, the detached market was coolest in the Northeast, East and the North districts. The Northeast had the highest detached months of supply at 4.18 months and the lowest sales to new list ratio at about 38%, and largest year-over-year detached price decline at nearly 7%. The East district also showed pressure, with 3.57 months of supply and prices down to about 6.8% year-over-year. The North district was not as soft as those two, but prices were still down about 5% from last year. So for detached homes, the pressure is not citywide, it is more concentrated in certain districts. Now let's take a look at semi-detached homes. Semi-detached sales were 217 in May, with 375 new listings. Months of supply set at 2.73 months, and the benchmark price reached 691,100. That is only about 1% lower than last May, and it is up from 667,000 in January. That is another segment where we are seeing a fairly steady spring recovery from winter months. Semi-detached homes are not moving at the same pace everywhere, but overall, this part of the market remains relatively balanced. For buyers, this segment can still offer good value compared to detached homes. For sellers, it is still competitive, but not automatic. Presentation and pricing still matter. For detached homes, the hottest district in May were Southeast, West, and Northeast. The Southeast had the strongest semi-detached reading, with sales to new list ratio of 83% and only 1.7 months of supply. The West district stood out with 2.39 months of supply and sales to new list ratio at 66%, and prices slightly above last year. The Northwest was also one of the strongest districts, with prices up almost 2% year-over-year, which was the best annual price performance for semi-detached homes in the city. The softest semi-detached districts were North and Northeast. The North had the weakest sale to new list ratio at about 33% and the highest number of months of supply at 5.67 months. The Northeast also showed more pressure with 3.64 months of supply and the largest year-over-year price decline in a semi-detached category, down almost 6%. This is a good example of why semi-detached homes cannot be judged by citywide number alone. Some districts are still tight, while others are giving buyers more leverage. Now, row homes and townhouse. This is where buyers are starting to feel more choice. Row home sales in May were 350, down about 23% from last year. New listings were 695. The sell to new list ratio fell to about 50% and months of supply moved up to 3.35 months. The benchmark price was $422,300, which is about 6.5% lower than May of last year. That doesn't mean that every townhouse is struggling, but it does mean buyers have more options than they did a year ago. When that happens, the average and overpriced listings gets exposed quickly. The best positioned homes still attract attention. The ones that need work, have higher fees, weaker location, or aggressive pricing are much more likely to sit. For townhouse sellers, you need to be very clear about your competition. Not just what sold 3 months ago, but what is active today. What does your buyer see online right now? What can they choose instead of your property? That is the comparison that matters. For row homes and townhouses, the strongest district in May were South, North, and City Center. The South district had the best overall balance, with the highest row home sale to new list ratio at about 61% and the lowest months of supply at 2.5 months. The North district also had a strong sales to new list ratio just over 58%, with months of supply under 3 months. City Center was also relatively active, with sale to new list ratio around 55% and 2.83 months of supply. The softest row home districts were East, Northeast, and Southeast. The East District had a very weak month with only 3 sales and 29 new listings and nearly 20 months of supply. So we have to treat this as a small sample, but it is still a clear buyer favorable reading. The Northeast had 4.27 months of supply and prices down almost 10.8% year over year. The Southeast had elevated supply at 3.82 months and prices fell about 8.5% from last year. So with townhomes, buyers have more options, but the South and parts of inner market are still performing better than a softer districts. Now, let's talk about apartment condos. This is the segment under the most pressure. Apartment sales in May were 403, down almost 30% compared to last year. New listings were 961. That pushed months of supply to 5.14 months and the benchmark price was 300,400. That is about 9% lower than May of last year, and Krebs specifically noted that the apartment prices remain lower than January levels. That is where the supply story is clearest. There is more competition from rental market, there is more competition from new home market, and resale condos are having to work harder to stand out. For apartment sellers, this is the market where pricing too high at the start can be costly. You need strong presentation, clean marketing, and realistic strategy from day one. Buyers have choices. If your unit is not priced properly, they will simply move to the next option. For apartment buyers, this is where opportunity exists, but you need to be careful. Lower price does not automatically mean a better deal. You still have to review condo documents, reserve fund, insurance, fees, bylaws, building condition, and future resale potential. A good condo can still be a smart purchase. The wrong condo can become expensive very quickly. For apartment condos, even the strongest districts were not exactly hot compared to detached homes. But within the apartment segment, the strongest district in May were West, Southeast, and Northwest. The West District had the best apartment condo reading with the highest sale to new list ratio at about 55% and the lowest months of supply at 3.45 months. The Southeast was next with a sale to new list ratio at over 52% and 4.49 months of supply. The Northwest also stood out because it had the smallest year-over-year price decline among apartments district, down about 6%, and it posted a positive month-over-month price move. The coldest apartment districts were Northeast, North, and East. The Northeast had the highest apartment month of supply at almost 8 months, with the price down about 13% year-over-year. The North District had 6.17 months of supply and the prices were down more than 10%. The East District also showed heavy price pressure with prices down about 13%, although the sale volume there was very small, so that number can move around more month to month. This is why buyers have more negotiating power right now, but they still need to be careful. In the condo market, the building reserve fund, condo fees, insurance, location, and future resale appeal matter just as much as the purchase price. So let's zoom out and look at the overall district pictures across all residential property types. This is where the map tells a very clear story. The West District had a total benchmark price at $726,600, down only 0.5% year over year. The South was at $582,300, down only 1.5%. The Northwest was at $636,900, down about 1.7%. The city center was $568,800, down about 3.4%. The Southeast was at $556,200, down about 3.9%. The North was at $526,500, down about 5.5%. East was at 400,800, down about 7%. And the Northeast was at 467,800, down about 7.5%. So when you hear that the Calgary benchmark price is down about 3% overall, that number is useful, but it is not enough. A seller in a West District is not dealing with the same pressure as the seller in a Northeast. A detached seller is not in the same position as an apartment seller. A townhouse in a lower supply area may perform very differently than a similar property in a higher supply area. That is why the details matter. So let's compare where we are today to 6 months ago. Back in December, Calgary was in the winter market. Sales were much lower, inventory was lower, days on the market were higher, and the benchmark price was around 554,700. By May, sales had picked up, inventory had climbed to 6,752 units, and days on the market improved to 34 days, and the benchmark price moved to 570,500. That is a normal seasonal improvement. The spring market usually brings more activity, but what is different this year is that the added activity did not erase the supply build. Inventory is higher than earlier in the year, and buyers have more choice. So compared to 6 months ago, the market is more active, but it is also more competitive for sellers. Compared for the last several years, this feels much more normal. During the peak years, buyers were often dealing with a very limited choice, big timelines, and aggressive competition. Today, the market is more balanced overall, but that balance is not spread evenly. Detached homes in stronger districts are still more resilient. Apartment condos are much more buyer-friendly. Townhomes sit somewhere in the middle, depending heavily on the district, price, condition, and competition. So, what does this all mean if you're selling? The first thing is that the market will not forgive overpricing the way it did during the peak. Buyers have more options now. That does not mean they're not buying, it just means they're more selective. And if you're selling, you need to know 3 things before you list: what was sold recently, what is currently competing against you, and how your property compares in condition, price, location, layout, and presentation. The first 2 weeks are still very important. That is when your listing gets the most attention. If you're priced too high, the market rejects it early and you might end up chasing the buyers instead of attracting them. This is especially important for apartment condos and some townhouse segments where buyers have more options and more negotiating power. The detached and semi-detached homes, the opportunity is still there. But strategy matters. The better home, the better presentation, the sharper the pricing, the better result. So, now, what does it mean if you're buying? You're likely to have more room to breathe than buyers had in the last few years. You can compare more homes, be more selective, and in some segments, especially apartments and certainly townhouses, you may have more negotiating power. But the better properties are still moving. So the strategy is not to wait forever, the strategy is to understand the value, know your numbers, and be ready when the right home appears. For detached homes in stronger districts, you need to move with confidence. For apartments and some townhouses, you may have more time, but you still need to be disciplined. The goal is not just to buy something cheaper than the last year. The goal is to buy the right property at the right location with the right long-term fundamentals. For investors, this market requires discipline. Do not chase something just because the price is lower than the last year. Look at the fundamentals: cash flow, condo fee, vacancy risk, building condition, rental demand, long-term resale, and the competition from new rentals and new construction. There will be opportunities, especially where the sellers are more motivated or where supply is higher. But this is not the market where every discounted property is automatically a good investment. In fact, the wrong condo or the wrong townhouse can look very attractive on price and still be expensive long term. The analysis matters more than the headline. So, here's a simple summary for May. Calgary's market is more balanced than it was during the peak years. Sales are lower than the last year. Inventory has continued to rise from the beginning of the year. Prices have improved from winter but remain below last May. Detached and semi-detached homes are still showing more stability. Townhomes are more competitive and more district dependent. Apartment condos are clearly seeing the most pressure from high supply. The biggest message this month is this: buyers are still in the market, but they are having more choice. And when buyers have more choice, sellers need better strategy. If you're thinking about buying, selling, or investing in Calgary, do not rely on a city-wide headline. Look at your specific community, property type, price range, and competition. That is where the real answer is. If you want a breakdown of what is happening in your area, just send me a message and what community you're interested in. I will help you understand what the numbers mean for your specific situation. So thank you for watching and see you in the next month market update.